Hello and welcome to my usual war and market update. Well, first of all, I just wanted to thank you all for the continuous feedback you're giving me. Many are saying that the audio is okay now, some are still saying the volume is low. So, I've been doing some little work in terms of searching through YouTube and other channels to know what way I can improve. And some of you have suggested for me not to use my AirPods from a health consideration. So a lot of thoughts. Thank you for all your feedback. So I'm today not using my AirPods as you can see, but I've done some changes to the settings in my iPhone, which they say will give much better audio clarity. So do continue your feedback on whether today's video is very clear. I've done a lot of minor changes in the settings. So with that being done, let's come to today's market. Well, you know what? The markets are setting into a pattern, right? What is the pattern that I see? That every day it seems to start off with some bad news and a bad start. Middle of the day, something happens. Either some good news comes from international side or from domestic side. The markets start to rally, and then at the end, right, there is a slight bit of profit taking and the market settle down. And every day, if you see, the broader indices, large, mid, small, micro, are all been trading only between plus or minus 1% roughly. Well, that was the trend even today. Minor changes from yesterday to today, other than what I said, was the fact that today all the indices were positive. The Nifty was flat, marginally positive. The mid cap, small cap, micro cap are all up between 40 basis points to 1 percentage points, right? So clearly that was different from yesterday, though the pattern was the same. The other difference from yesterday was the IT hammering day, which caused a lot of grief in the market. And I also explained to you that if IT had been flat yesterday, all the indices would have been positive. Well, that turned today. IT was reasonably flat today and all the indices turned positive. The third change from yesterday to today was the advanced decline ratio. Yesterday we were strongly in favor of the declines, if you remember, but today about 400 stocks switched sides, which means that today it was in favor of advances and declines. Not big difference, about 1700 stocks up and about 1200 stocks down. Yesterday, if you remember, it was the reverse. So slight tilt, probably about net 400 difference between advances and declines, but still a positive tilt to that extent, right? So what caused this, right? And if you look at FIIs, they were at 8,000 crores selling 2 days ago, 5,000 crores selling, today also 4,000 crores selling. And as you've seen, DIIs are tending to fall into a particular pattern of behavior. When the FI selling steps up, they step up their buying. When the FI selling comes down, they roll down their buying. Same story played out today again, right? When it was 8,000 crores, if you remember, they bought 9,500 crores. Yesterday, when they sold about 5,000 crores, these people bought a little more than that. Today, it was slightly less. It was 200 crores less. So if I sold about 4,000 odd crores, these will also bought 4,000 crores, but slightly less. So overall, if the FII and DII flows roughly matched each other, then why did all the indices turn positive? Clearly, retail and HNI buying also stepped up to support the buying, right? And like I said, the V-shaped recovery. What happened? Well, the overnight news was not great. There was tension in the markets about the geopolitics and all the crisis. And during the course of the day, there was some news that Lebanon and Israel seemed, or rather Hezbollah, to put it better, seemed to have agreed to some kind of a ceasefire that if you don't fire, I will not fire, which the markets viewed positively, and Brent crude naturally reacted slightly better. It was down about $2 to about 96, but now post-market also I'm seeing that Brent crude has further eased to 95. So marginal easing, expectation of a solution. There was a lot of hangama about the fact that the US Congress had asked Trump to stop the war. That is just noise. Mr. Trump can still veto it, so I don't think it'll have any bearing on the war. The fact is that 4 Republican senators went against Trump and said stop the war. That's the only part of it there. So, and the overall macro, otherwise the indices, you see dollar index slightly eased, but around the 99 levels. US interest rates also slightly eased 3 basis points. Indian interest rates were also around the 7. So nothing great there. The rupee dollar also there was a slight bit of weakening, 7 basis points. So nothing really great on the geopolitical front, right? Now the FIs continues selling because I told you that this oil at 97 to 95 doesn't matter a whit to the FIs. For them, they would like, if the war ends, to see a strong $10 at least drop in the price of Brent crude for them to do anything India specific. That's number one. Number two is that fact that even at this $85 if it comes, it is going to be a severe impact on India's fiscal, and they will look for clarity and direction from the Reserve Bank, from the Government of India on how are you going to manage the fiscal situation. Until that, I don't think FII selling is going to abate in a great way. 4,000-5,000 crores selling will continue every day. We should just hope and pray that it doesn't suddenly step up to 10,000 or 15,000 crores selling, in which case it will be very hard for DIs and individual investors to cope with that, and the markets can correct. So that being said, today almost all the indices were in the positive. Like I mentioned, even IT was flat. The only index which was in the negative was metals. I think because of China-related slowdown information coming through, and I think there was just one more index which was slightly in the negative. The star performing index today was consumer durables. A whole bunch of stocks there have caused this, largely in the mid cap and small cap space, right? So what is it that's giving this market this feeling? When FIs are selling, domestic is continuing to support and keep it up. Well, the big day is tomorrow, Reserve Bank's policy day. And as I've been telling over the last couple of days, right, that's a very important policy. This time, not only FIIs, but everybody is going to look at the direction, because not only is the stance important, not only is the rate cut or rate hike indications for not just now, for the future important, but also the inflation print and the GDP print, right? We all know for FY26 it was about 7.5%. First quarter is likely to be about 6.9 is what is expected, but it's the subsequent quarters. So this time I think the RBI cannot afford to say that we look past the crisis, because the crisis is going on. It's already impacted the economy for 4 whole months now, March, April, May, and June likely. So from that point of view, right, I think RBI has to address the issues both in terms of inflation, with the monsoon forecast also being less. They will have to talk about it and address it. Also the imported inflation, because the currency is also weakening in addition to crude. So it's a double whammy. So RBI will address it, will give out its statistics in terms of what it expects, and that the market will seek that direction. And that's where I'm a little bit worried about the complacency of the market. Today also, if you see, it is the sectors like the rate sensitives, PSU banks, private banks, auto, realty, consumer durables, all have ended in the positive note. So the market is clearly, I would like to call it complacency, but maybe the market feels that the Reserve Bank will soft talk and keep the thing going. I'm not so confident about that, but it's only one day now, nothing much to do tomorrow's market, so don't do anything based on this. But I am a little bit worried that the market is not giving any heed to the fact that the underlying economic situation is not supportive of an RBI being supportive on the rates front or on the neutral or accommodation or those kind of a view front. So I'd like to wait for the policy before taking a call. It's one more day. Let's wait for it. I hope and pray that it's going to be a pragmatic policy which takes note of the risks. What we don't want to see is RBI saying, oh, there's no risk, another 2 months war will end and everything will be back to normal. It's not going to be the case. So I'd like to see an RBI which is taking it on hand and clearly lays out the risks, really lays out the stance on what they will do. And if they surprise with a rate hike, initially the market will react badly, but I feel that the market will breathe a sigh of relief that RBI is proactively front-loading a rate hike, and that it means that there won't be too many more rate hikes in the future. Remember, domestic economists and agencies, broking agencies are expecting a hold, but some of the foreign ones, and I talked today, Stanchart was talking about a 50 basis points rate cut in FY27, rate hike, sorry, my slip of tongue, by in FY27. So clearly that's going to dominate. So let's wait and watch. I'll come back to you tomorrow, and do remember to give me feedback on this audio quality based on certain hacks I've done, and look forward to talking to you tomorrow, both about the RBI policy, on which I'll put a separate video, as well as on the market for tomorrow.